Hey guys, this is some very interesting and confusing dialogue which was discovered in the live stream last night. I just wanted to do a separate video to make it very individualized, I guess you'd say, for this. For those that don't watch the live stream, I don't want them to miss out on this. This is potentially important information. So, thanks to the viewers that were in the live stream last night that got our attention to come and look at this. Now, this is a press release from yesterday. Okay, Federal Reserve Board issues guidelines to evaluate requests for joint accounts at the Federal Reserve banks. Federal Reserve Board on Wednesday released final guidelines that will be used to evaluate requests for joint accounts at the Federal Reserve banks effective upon publication in the Federal Register. Joint accounts are intended to facilitate settlement between depository institutions participating in private sector payment systems. Private sector payment systems. The Reserve banks have, in limited cases in the past, opened joint accounts where the rights and liabilities are shared among multiple depository institution account holders. The final guidelines will provide consistency and transparency with respect to evaluation of future joint account requests. Given continued innovation in the U.S. payment system and the likelihood that there may be broader interest in such joint account arrangements going forward, the final guidelines broadly outline considerations for evaluating joint account requests. Requests will be evaluated on a case-by-case basis, and more specific considerations and information necessary to evaluate a particular request will likely be required based on the complexity of the arrangement and other factors. The Board's Federal Register notice is attached. Parties may contact the Federal Reserve Bank in their respective districts for more information about requesting a joint account. So I guess that's something we should all be doing today, is calling the Federal Reserve Bank in our district. Now, by our district, I don't know if they mean the district in which we live or if they mean the district that our letter is assigned to. I'm not saying that this is open and closed, a definite statement about disclosing the accounts. I did read this PDF, which I have right here, and it's 31 pages. I didn't read the entire thing. I actually started reading from the back up, because a lot of times I find that they put the most important information in the bottom or the end of the long documents. There is some very interesting verbiage at the end of this document. Let's see here. I can scroll down. There we go. Yeah, I'm not gonna have time to read the whole thing because this is a long document, but I'll go through some key points, and then I will be breaking this apart and picking it apart tomorrow, or not tomorrow, today, a little bit later. I gotta at least take a little nap here. The private sector arrangement should not cause undue credit, settlement, or other risks to the efficient operation of other payment systems or the payment system as a whole, meaning maybe that they're concerned about the fiat money system as a whole collapsing. Maybe that's verbiage, as in how they'll limit the amount of funds that can be used or taken at once. The operational and financial interaction with and use of other payment systems should be identified. The extent to which the use of the joint account may restrict a portion of funds from being available to support liquidity needs of depository institutions for other payment and settlement activity will also be considered. So as I said, maybe what we're reading here is in reference to if we do get these accounts, if this really is what this document is about, that they're going to implement restrictions on how much you can use at once to keep the dollar and the economy from crashing. I'm not sure there. I don't want to jump to conclusions. I don't like to do that. I'm just kind of briefly going over some key points. The agent and the joint account holders should demonstrate an ongoing ability to meet all obligations under the joint account agreement with the account holding reserve bank. The manner in which the joint account will be used in support of the private sector arrangement and any anticipated use of the Federal Reserve Bank services should be identified. The Reserve Bank will not extend overnight or intraday credit to a joint account. The private sector arrangement should structure its use of the joint account and Reserve Bank services in a manner that seeks to avoid intraday overdrafts. So maybe they're going to set up the joint account, and the joint account is going to be where you are able to draw money off of the main fund. I don't know. That's what I'm trying to understand here. This article could have absolutely nothing to do with the accounts. I do think that the timing is very strange, though, for a bank that every time we've called them to say that they do not have accounts with individuals, they do not have accounts for private men and women. And then all of a sudden, after everything that's been going on the last month, and then they come out with this, it does raise some eyebrows. The agent also should demonstrate ways to monitor the joint account on an ongoing basis to avoid overdrafts and to promptly cover any inadvertent overdrafts. Further, the agent should demonstrate the ability to appropriately monitor transactions into and out of the joint account. Finally, the design and rules of the private sector arrangement, including rules related to funding of and disbursements from the joint account, should be consistent with the intended use of the account, such as that a participant can only use the balances for the intended purpose of settling payments or debt in the associated system. Is that what that is? An evaluation under this principle would assess whether the system is widely available for use by its intended end users, is designed to minimize the risk of disruption, rejection, or delay of payments. What we've been having happen. Is that what that is? To end users and promotes transparency for end users. You know what's kind of funny there is that's exact verbiage that I used in that petition. In the public more broadly, for example, by making its operating rules, rulemaking processes, lists of participants, or certain network statistics publicly available. Evaluation under this guideline would also assess whether the system creates inefficiencies in payment processes or barriers to interoperability within the U.S. dollar payment system. Also of relevance is whether the private sector arrangement promotes a payment system improvements and innovations and the extent to which the arrangement fosters competition in the payment system, for example, between providers or payment services. So, talking about these third-party providers and payment processing service providers. Evaluation under this principle will take into account the applicable supervisory framework for the private sector arrangement. The payment system established by a private sector arrangement, including the operator, should be subject to federal or state supervision and should be subject to the jurisdiction of a federal banking agency with the authority to examine or inspect the private sector arrangement and take supervisory actions against the arrangement or its participants. This means that for a payment system established by a private sector arrangement and supervised by a state regulatory body, a federal banking agency need not be engaging in active supervision or examination, but should have the authority to do so when the risk, scope, and operations call for such supervision or examination. For example, under the Bank Service Company Act, federal banking agencies have the authority to examine third-party service providers. Bank Service Service Company Act. Federal banking agencies have the authority to examine third-party service providers that perform services for depository institutions, and that the depository institution could otherwise, or that the depository institution could otherwise do itself. So it gives all these like FDIC or federal banking agencies the authority to examine the third-party service providers. So they are able to see requests for joint accounts involving financially unsound operator would not be approved. So if you are not financially sound, they're not going to let you have access to your account, or maybe that means if they're deeming not being financially sound as not having an account, maybe in some instances of, say, like immigrants, maybe they don't have an account, and that's why they're putting the verbiage there, maybe. Again, this is all speculation. I have to like really do a lot of clarifying. I'm just kind of trying to look at this from a perspective of, if this was about that, then how, I'm trying to find the stuff that would reference that. Evaluation may include, among other things, reviewing financial statements of the operator, maybe their secret account statement, to make sure there's money there, as well as cash flow projections, including capital and operating expenses. Okay. The board's PSR policy sets forth standards regarding the management of risks in financial market infrastructure present to the financial system when an FMI expects us to settle a daily aggregate gross value of $5 billion on a given day when providing accounts and services to FMIs. Generally, FMIs are multilateral systems among participating financial institutions, including the system operator, used for the purpose of clearing, settling, recording payment securities, and other financial transactions. For the purpose of a system that uses joint account to facilitate settlement, standards would be applicable regardless of the daily aggregate gross value on a given day. So is that saying that like $5 billion is the maximum they'll allow for a given day combined, like as a group? Is that what I'm thinking it is? I'm going to highlight that just in case. I forgot to highlight some stuff on the bottom. I'll get that later. As of the date of the publication of final guidelines, those expectations are identified in Part 1, Section C of the PSR policy, general policy expectations for other payment systems within the scope of the policy. private sector arrangement should have policies and procedures to minimize disruption to its system when one of its participants, the agent or the operator, fails, or in the event of operational failures. The arrangement's rules should also sufficiently address the responsibilities and liabilities of the participant's agent and operator in cases of operational disruption, erroneous or fraudulent. Maybe they're saying if you're using the account for something other than its intended use after they establish the accounts, that's what they're talking about here maybe. In addition to any party's supervisory obligations in private sector arrangements that uses a joint account approved under these guidelines will be expected to manage risks consistent with the general policy expectations for payment systems outlined with Part 1 of the Board's Federal Reserve Policy and Payment System Risk at a minimum. These policy expectations apply even if the private sector arrangement is not otherwise subject to PSR policy. Thus, before authorizing the establishment of a joint account, the private sector arrangement would be expected to demonstrate that it has a general risk management framework appropriate for the risks the system poses to the operator, agent, participants, the Federal Reserve Bank granting the joint account, and other relevant parties and payment systems. Requesters of a joint account should provide supporting legal analysis as well as the system's rules, agreements, and other governing documents. The legal analysis should consider the application of applicable laws and regulations such as UCC 4A, the Electronic Funds Transfer Act, U.S. sanctions programs, Bank Secrecy Act, and anti-money laundering requirements or regulations, and other relevant laws and regulations, the attachment risk related to the account, and how the operation of the account would be affected by participants' insolvency. Private sector arrangement should demonstrate that it has a well-founded, clear, transparent, and enforceable legal basis in all aspects of its proposed arrangement. So you have to prove, I guess you're going to have to prove that beyond a shadow of a doubt that you have an account to them. Is that what that means? Consistent with the Federal Reserve Bank's deposit-taking authority, a Federal Reserve Bank's obligation with respect to any balance in a joint account will be owed solely to the joint account holders, and no non-account holders may have any rights against the Federal Reserve Bank with respect to the balance. No party other than the account holder shall have claim against the account holding Reserve Bank in connection with the operation of the joint account, including any decision related to opening or refusing to open the account. So is that saying that is that one loophole they're putting in there, if this is really for the accounts, that no other person can access that account? So say you pass away and you still have, whatever, $10 billion in there, and your money then won't go to your children or your wife, or is that what I'm reading in that, or am I just reading into things? It's too early to tell. I'd have to really read through this entire thing. As I said in the beginning, this document here raises a lot of questions. It's very kind of confusing as to some of the verbiage really seems like it's related to the accounts, but then some of the other verbiage makes it sound like it really isn't. Makes it sound like it's just for individuals or people in the private sector that are maybe private businesses or something like that that are looking to establish accounts for business aspects. This is a very interesting article. Now, if somebody else already decodes this before I put up the secondary video decoding this, please forward that to me. I'm going to stop there. Hold on, let me just read that last. The designated agent or operator of the private sector arrangement would not need to be a depository institution, assuming it is not a joint account holder. So the agent or operator of the private sector arrangement would not need to be a depository institution. Huh. Okay. Yeah, as I said, this document is very interesting and it's very confusing. So it's going to take a little bit of time to really read through and understand and decipher. I didn't want to delay on getting this information out, so that's why I'm putting this out before I really get a complete and total understanding of it. But I went to the bottom. I read some of the top, and then I went to the bottom, because a lot of times they hide some of the most important information at the bottom. And it kind of seems like there was some pretty important information on the bottom, wouldn't you guys say? So let me know what you guys think. If you like what I'm doing, give me a like. Please make sure to like the video. If you haven't already subscribed, do so now, as I'm only getting started. And leave me your thoughts in the comment section below. And most importantly, share, share, share. Get this out. Get more people reading this. The more minds we have working on this, the better understanding we'll have. Alright guys, much love.